Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Let's dive in and take a look at futures and derivatives. We have here coinalyze.net. And on top is the Perpetual futures from Coinbase on a 4-hour time frame. And I zoomed out a little bit because it's important to see some trends, even though we're on a 4-hour chart. See some interesting trends developing. So this yellow line marked, that's January the 22nd, 2022, this year. You can see the price dropped down to that point and then started picking back up. So in the second row here, we have the aggregated open interest stablecoin margin contracts. Aggregated just means that they combine several exchanges together, and it's stablecoin backed because when you open position, leverage positions or margin positions on exchanges, you need to deposit something. So these are using stable coins. Down below here, they're using coins like Bitcoin or some other coins. You can what's interesting here is that since the 22nd, it's pretty much has gone slightly up. It reached a slight bottom here, at least for this range, since December 21st. It reached a bottom here and started going back up. Obviously, there are some fluctuations in between, but on average, it's been trending up. The opposite has happened with the coin margin contracts. They've been slightly going down. So the reason people use stablecoin is because when you deposit coins like Bitcoin and Bitcoin goes down in price, it's a double whammer. You get hurt both ways because like as the value of your coins in your deposit margin account goes down, guess what? You have less money in there, so you get liquidated faster. So I think people are realizing that, and they're going towards more stable coins, which is smarter. Over that period here, we can see that we had from October to roughly right here, which is December, end of December. It's been positive funding here, right? And right here, it went negative for a little bit, significantly negative. And you can see the price drop here. And then it went positive, slightly positive again, but nowhere near what we had back in Q4 of 2021. And then it's kind of like it's been pretty low, the funding rate, but mostly positive. And then it's trending more negative now. When funding is negative, it means that people who hold short positions are paying a premium, an interest rate, if you will, to the people that are longing or betting the price will go up. And this row right here is the predicted funding rate, and it's aggregated across a handful of exchanges. The bottom one is the actual ones. So you can see even though it's negative, it sometimes goes positive. It's cyclical, but mostly negative. But overall, right now, it's sitting more neutral than anything else. Like 0.000 whatever. It's neutral. In fact, some exchanges consider 0.01 their average neutral. So it's sitting mostly neutral, and it could, usually if the funding rate is significantly negative and open interest is going up, that means that price tends to go up. They'll push the price up to liquidate the shorts. Vice versa, if the funding rate is positive, that means longs are paying shorts, and open interest is high, then more than likely price is going to drop. They'll influence the price to drop to liquidate the longs. And since it's neutral and interest rates open interest is going up, what do I think is going to happen? Before we check that out, I want to show you something else. This bottom row here is called the aggregated cumulative volume delta. This blue line just measures, that's just a fancy way of measuring demand and supply and demand. So when it's going down, that means the demand is dropping. When it's going up, that means demand is going. There are more demand. There is more demand. So if you look here, since like way back in April, it started declining. So retailers pretty much started slowly leaving the market, and it accelerated back in November 2021. It just dipped. But here's the interesting thing, though. I want you to see. So it went sideways, dip, big dip, sideways, slightly down, dip, and guess what? It's climbing back up. So you can see, even though it's a tiny little move, that's a good sign that people are starting to come back in to similar levels as to around January, December, end of December to January. Even though this is a slight downhill right there, they're coming back in. That's really that's positive in my mind. I look at this often. This is pretty cool indicator. So as they come back into the market, that's a good sign. It's healthy for the market. We need new money back in, and to be able to have rallies to the upside. So what does this mean? It's kind of neutral, but since open interest is increasing, the market can go either way. But which way will it go? So we got to take a look. This is High Block Capital's liquidation level map. You can see I was talking about this the other day. We were right around here the other day, and guess what? It went up, then down. It went down, liquidated some longs, because you can see how it changed here. This green area here shows the difference in how in longs, the overage of number of longs that could get liquidated. So right now, for example, back here, $2.6 billion worth of long that could get liquidated. And this is only measuring people who do leverage of 25x to 100x. That's it. And that's a lot. So you can see that it dropped here as price dropped down. It liquidated some longs here. You can see them, the little bubbles here. Liquidate some of them. You can see that drop here, and then it slowly climbed back up. So as price dropped, more longs came in, and then price went as price went up, then price dropped back down, and so on and so forth. So right now we have $1.8 billion more in high leverage positions for longs that could get liquidated. And those positions are down here, right there. Next one to get liquidated would be right here. So that's why in my opinion, this is pretty much going sideways right now. But sooner or later, we're going to have a big change. Like consolidation and boredom leads to a strong movement to the upside or downside. Since more money is down here, where to liquidate longs, my bet is that it's a bull trap and it's going to go down. That's my bet. It could go up, but that's not as much money up here. If I was money, I would go down here. But you can see this level right here, and this is 38K right here, right there, 38K. So we would have to drop below 38K, 36K is down here. It would have to drop towards 36K to clear this. And it could drop even further, because dropping here slightly doesn't do much good right here. They cleared out those levels already, unless they pop back in. So that's why I feel it could go up slightly still, but the big drop will be to the downside, because this is where money is. I hope this video added value to you. If you're watching this on Twitter, remember to pop it out and log into your YouTube account. And please smash the like, ring my bell, and hit subscribe. I'll see you in the next video later today. Peace.